Hello, welcome to another video blog, another podcast. If you're hearing this from the podcast channel that we have, I'm going to drop the link below. If you're watching this on YouTube or any other platform, first and foremost, I want to thank you for being here, giving your time, and also becoming part of our community at Master Investor. We appreciate you very much. We're providing high quality financial education made simple with lucrative opportunities to create passive income and build true wealth. So our mission is quite straightforward. It's to elevate the financial well-being of humanity. We are more than an investment management company. Here at Master Investor, we're going to ensure that we're giving you the financial education that you need in order to take massive action with the knowledge that will make you successful when we're speaking about money, business, and investing. Today, we're going to talk about strategies on real estate investing. First, I want to take you to our website here. You can also check out the link in the description. If you are interested in learning more in detail about how to build cash flow, how to start your business online, how to start your brand, how to start making money work hard for you. Remember, our rule number one of our community is that we focus on building passive income. There are three types of income a person can work for. Here at Master Investor, we focus on building passive income. It's the best type of income, and we're going to be speaking about that in just a minute when we dive into our video blog today. And I'm going to tell you the three types of income. We always talk about it, so it's not the first time we mention it here on our channel, but for those that are watching for the first time, I believe it's very important for you to know which type of income you're working for, because a lot of people don't even know that other types of income exist, and so therefore they always end up working for earned income. That's when you trade your time for money, when you're working hard at a job and you basically are being controlled by other people. And so we want to give you that control back. We want to show you that there are better ways that you can actually make money in this world and get ahead financially, right? It's all about building your asset column. So here on our website, as you can see, we have how to instantly create positive cash flow and print money legally and reach financial freedom, right? And financial freedom is reached when you have an asset, which is a business or investment that produces passive income, enough that it pays for all your bills and everything that you do during the month. So you gotta find out what's your monthly living expense, and when you have an asset that produces that amount of income, then you are financially free because you're not working for that money. You have an asset that's working hard for you to create that money. So that's the first step if you want to break free from the rat race, is to figure out the living expense amount. Okay, what is your total amount of bills and everything that you use during the month, including your food expense, right? Even if you're paying for gas or whatever, put that number and figure out what is that number exactly. And so we're going to focus on building an asset or acquiring an asset that produces that amount and higher. Once that happens, you're financially free. Okay, you're going to feel rich because you're not working for money. You actually have the choice to make your own decisions. You don't have to listen to anybody telling you have to be at their job at a certain time. You have to be, taking days off whenever they want to, know whenever you want to. So you're going to be actually having the time to think of your purpose in life, what is your calling, and what type of contribution you want to offer to society, right? In your community and your country. If you're watching this from anywhere outside the United States, please drop your country below. I would like to know exactly where are you signing on and following us here at Master Investor. Make sure you smash the like button, share this great content with others, and also turn on the notifications so that you know exactly when we go live with another important financial education video so that you start making more passive income, right? So rule number one of our community is that we work to build passive income and we make money work hard for us, right? We don't chase the bag. We make sure that we have systems, we have an asset working hard for us, making us more money. And when we get passive income, we turn around and make that money work hard for us. So we send the money to work, okay? So as you can see, you have our website here. Knowledge is money, right? We have acquire sound assets, and number 3, use good debt. Remember, there are 2 types of debt: good debt and bad debt. Good debt puts money in our pocket in the form of passive income, and it's basically we're getting rich for free legally. We're using OPM, other people's money, the bank's money, because the banks are in the business of lending money, and today money is created with debt. That's why we love to use debt, because debt is tax-free. In other words, we don't pay any taxes on debt. So if we can use debt to build an asset, then great, because we're already taking out the highest expense that majority of people have in their lifetime, which is taxes, okay? And by building assets with debt and for passive income, then we have the holy grail, because passive income allows you to take taxes all the way down to 0 legally, so you are literally a tax-free entity. And we're going to show you how to do that as you learn more about money, business, and investing here at Master Investor Company. We're going to give you the knowledge, like I said earlier on in the video, okay? I told you our mission is to elevate the financial well-being of all partners. So you can scroll all the way down. You're going to be learning some of the things to use systems to get wealthy, learn to use leverage, learn to invest good debt, learn to build the asset column, learn the new rules of money, because the old rules of money do not work anymore. Okay, and majority of people are still operating with the old rules of money because they have the wrong knowledge about money. They have the wrong information. We're going to give you an update that if you don't know the new rules of money, they have changed over the past decades, starting in 1971 when President Nixon separated the gold standard from the US dollar. From that point on, that's when money became debt. That's when money started being created with debt, and money became monopoly money, became paper money, became fiat money, not real money, became a currency and just an idea backed up by confidence, okay? You're also going to learn about business, because when we talk about investing, we're going to be speaking about business, because investing is business. You can't have investing without business. So the more you know about business, the better you're going to be at investing, okay? And we're not talking about trading, because the stock market for us here at Master Investor is for losers. If you're buying something to hold it and praying that the market's gonna go up so that you can sell it for a profit, that's too risky, and anyone can do that. We're gonna give you better knowledge and information that you can actually have control over your assets, build something that is producing passive income every day. You don't have to pray, it's calculated, and you can actually see the cash flow coming into your bank account, okay? Unless the stock is producing dividends, then it's a liability. 401k is a fake asset, because mutual funds, all of that, because you're paying into that and you're not receiving anything back in the form of passive income. So that is a liability, okay? An asset puts money into our pocket, and a liability takes money out of our pocket. And an asset puts money into our pocket whenever we're not working, specifically. That's why it's important to learn about systems, because we're not going to be working for money. Remember, our rule number 1 is that we work to build passive income and make money work hard for us. You're going to learn about tax law. You're going to learn corporate law, and of course, passive income. Learn about financial statements, because true wealth is found in the ability to read financial statements. And we all have a personal financial statement, and every business and investment has a financial statement. Learning how to read them will give you an unfair advantage among everybody, because you're going to be able to tell what's truly an asset and what is a liability. You're going to be able to say, no, this is a toxic business, I'm not acquiring that. This is a healthy business, because look, I can see the cash flow flowing through all the financial statement correctly, and I can see that is bringing in this amount after all expenses are paid, and this is the bottom line. This is the cash flow. This is what I'm going to get, and my partners are going to get at the end of the day. So very important to read your financial statements because it will tell you the real story behind the business, regardless of the brochure or the sales pitch behind whoever is selling you that business or investment. All right. So you make sure when you visit our website, you enter your information here so that we have your email. We can communicate exclusive content straight to your inbox. Okay. You're going to find our courses and of course our blog. We're producing daily blogs. You can read them. Today we're going to talk about our latest blog, which is before I do that, I want to show you this video that I uploaded just on our channel, on our YouTube channel. Make sure you go to our YouTube channel, Master Investor, look for the logo, and it's the only one really with this logo. We're the authentic brand of money, business, and investing, right? So I want to show you this little video that I put up. It's like 40 seconds long, but I think it's really good. Let me start it over. It's an advertisement for our ebook, How to Build Cash Flow with the Internet. You can find that ebook on our courses. But anyway, I hope you like it. Make sure that you go to our channel and subscribe. Okay, if you're watching this on YouTube, make sure you subscribe to the channel, of course, and that way we are growing our community. Okay, so let's dive into our blog. Today's topic is going to be what are strategies for investing in real estate. Okay, 7 expert strategies for real estate investing. Act now and keep learning throughout your life, and you will find that real estate investing can provide you with a wonderful foundation of wealth and happiness. Investment rule number 1 is to always know what kind of income you are working for. Remember what I told you at the beginning of the video. Here at Master Investor, we of course focus on building a passive income for us and our partners. What are strategies for investing in real estate? We're going to talk about the 7 different strategies, but first, before we start with the first one, we're going to talk about the 3 different types of income to remind the new viewers who don't know that there are 3 types of income that exist. Number 1, earned income. Income derived from a job or some other form of labor. In its most common form, it is income from a paycheck, because you can receive only as much earned income as you have hours to work. Your ability to build wealth in this way is severely limited, a dilemma that is compounded by the fact that earned income is also the most heavily taxed type of income. If you ever worked at a job, you will notice that when you get a paycheck, you, at least here in the United States, and I'm sure it's like that across the world, you get taxes taken out before you even get your paycheck. So you will see that if you earn this much, it's probably cut in half. Okay, the government takes taxes right from your paycheck. So you're basically working for the government. Okay, so it's very hard to become wealthy like that. Okay, you don't have many options to minimize taxes, and you are literally working for somebody else's dream, for somebody else's problems. You're solving somebody else's problems, and you're leaving your dreams behind. You're leaving your problems behind, because by the time you get home, you're too tired to even think of how to make more money. Okay. Number 2, capital gains income. Income derived from a portfolio of paper assets, fake assets such as stocks, bonds, and mutual funds, 401k. Capital gains income is by far the most popular form of investment income, since paper assets are relatively easy to manage and maintain as compared to physical assets. Also, it does not take much of financial education to buy something that you can sell for a higher price at a later time to get a gain. However, in some forms, stocks, the returns are highly unpredictable, while in others, mutual funds, the returns, while more predictable, are typically small or even negative. You also have to pay taxes on these gains when they do happen, and if they happen. Capital gains income is relying on the market swings, and oftentimes it is risky as there are not guarantees to recoup the money you used to acquire the fake asset. Remember that a real estate is determined by the fact that such business or investment puts passive income into your pocket today and in the future, even while you're sleeping or doing something else. Okay, so that's gonna lead us to number 3, passive income. Income that is not tied to a specific time or activity and that can flow to you without any specific current effort expended on your part. The primary example of passive income, accounting for some 80% of this type of income, is real estate investment income. Not only can real estate produce significant financial returns that grow over time, but because of its regular cash flow, it is also the most predictable form of investment income. Plus, it offers many valuable tax advantages. It is for all these reasons that real estate income is one of our favorite type of income here at Master Investor when we're acquiring passive income. There are 5 different asset classes that you can focus on building passive income. When you gather a team of professionals here, you can minimize taxes all the way to 0 legally. Remember what I said at the earlier of the video? It's all about being a tax-free entity and building passive income with debt, right? Other people's money, and of course, using strategies and investments for passive income so that you can minimize taxes all the way to 0. The challenge to generate income from real estate investments requires more preparation, practice, and persistence than any other form of income. Many people can invest in real estate and be successful to some degree. To be successful on a much larger scale, it takes those who master the essential skills and strategies used by the experts. Here are 7 helpful strategies by top real estate experts. Strategy number 1, don't try to do it all yourself. Your opportunities for growth and profits will remain limited if you try to do everything yourself. Real estate is complex, and beginners tend to lack an overall understanding of the real estate investment process. Investors can find themselves being too cautious or too careless. They will make mistakes, and while some mistakes are bound to happen, too many can be costly and lead to disaster. The best insurance against making too many costly mistakes is experience. But if you are new to the real estate game, you will need to leverage the experience of others. That's why I always say business and investing is a team sport. You never want to come and do this by yourself. That's why here at Master Investor, we offer products and services to help people build their brand, build their idea, come into a product, build it with a system that do the selling and telling for you, and also learn how to scale that, learn how to use that, learn how to launch your company if you don't have one, how to incorporate. We have all different sorts of products and services that we are offering to help you become successful when you are doing business and investing. Okay, there is nothing better than doing this with a team. Okay, we're here for that. We appreciate your business and time. So if you're listening to this or you're watching us here on our live broadcast at Master Investor YouTube channel, then we appreciate you very much. We want you to build passive income with us. Having and be able to keep that passive income and grow it, right, over time. Having the right partners can increase your returns in an investment venture, and sometimes dramatically. Some real estate investors believe that they can retain more profits if they do the work themselves, but that is not a strategy for the wealthy and successful real estate investors. Another reason for putting together an experienced team is scalability. Simply put, if you want to expand your real estate portfolio over time, you have to recognize that you can't find all the properties, fix all the problems, and manage them yourself. By building a team of property managers, real estate brokers, lenders, attorneys, and accountants, you can multiply the time and talent you have at your disposal essentially without limit. Strategy number 2, plan your tax strategy. Real estate investing has tremendous tax advantages. But to realize these advantages fully, you need to set up your real estate investing activities in the right way from the start. Several provisions of the U.S. tax code were written with the specific intent of encouraging real estate development and investing. The tax provisions give you the ability to shelter most, if not all, of the cash flow that your properties generate from federal and state taxation, sometimes even wiping out some of the taxes on personal income not related to real estate. The government treats real estate investing as a business, and because of this, you can deduct a wide variety of direct and indirect expenses that are associated with managing and maintaining a property. Things like repairs, utilities, office expense, property manager, salaries, advertising, and more. You can also deduct some significant phantom expenses like depreciation costs that are recorded in the property's books but that you don't actually pay out of pocket. To make the most of these tax benefits and savings, you need to have a real estate or a tax accountant on your team who can help you craft a tax strategy ahead of time. This will allow you to maximize your returns and minimize your taxes legally and legitimately. Strategy number 3, plan your legal strategy. Owning real estate can be a lucrative way to generate passive income, but like many business endeavors, real estate ownership can come with significant risk. Legal risk like landlord-tenant relationships or non-performance of contractual obligations are among the most significant of these. To be successful as an investor, you need to manage your legal risks. Why do you need a sophisticated legal strategy? Isn't insurance and a good lawyer enough? No, unfortunately. When legal risk in real estate investing are not properly managed, litigants can win judgments against you that will significantly reduce the value of your assets. In worst case scenarios, they may even be able to take your real estate assets themselves or unrelated assets such as business assets and personal residence. It is imperative that you protect yourself against the potential legal risk at the start of real estate investing career. This is another area where you are likely to only have a fraction of the knowledge you need. Finding partnering with expert legal services to build a legal strategy is key right from the start. Remember, sometimes we want to make sure we're doing things the right way from the start. It's okay to make mistakes, get started. You don't have to have all the pieces together right from the start. But if you have the information, then you need to act on that knowledge and make sure that you are not trying to save at the beginning because you want to, save a few $100s. Okay, no, make sure that you use that to protect yourself so that you consult and put together a legal team that can help you protect your assets and grow that from the beginning the right way so you can keep more of the gains. At the end, you're going to win. Okay, and from the beginning, you're winning because you're protected. So where you start your company, how you structure your LLC, the parent company, right? And then underneath that LLC, the state where you open it is very important. So one of the best states are Wyoming, Nevada, Delaware. You can find more information on one of our ebooks about that. And make sure you talk to one of the, experts on that area so that you can minimize liability. Okay. Strategy number 4, know your market. You have heard it before: location, location, location. Know as the 3 most important factors in determining a property's value. Location extends beyond obvious factors like a rundown neighborhood or an office park in disrepair. The role of location in a property's value begins before you even start thinking about geography. It starts with the property's intended purpose. For instance, if you are planning to invest in a commercial space, what types of businesses would you be appealing to? Customer-facing businesses like doctors, attorneys, and retail shops will have vastly different locational requirements than will manufacturers or wholesale entities. Likewise, if you are looking at renting apartments, the location priorities of students, families, seniors, and others prospective renters are likely to vary widely. Therefore, once you have chosen a type of property to invest in, you will want to carefully evaluate all relevant location factors such as transportation options, crime and safety, proximity of schools, retail establishments and restaurants, population dynamics, zoning, ordinance, property taxes, and many other factors, all of which will influence in areas of property values far into the future. Even then, however, you are not done because the statistics and fact sheets can tell you only so much. You will also want to drive the area in person in order to get a feel for the location in the same way that a prospective tenant or home buyer might do so. How long does it take to get to the freeway, the grocery store, or other business services? How noisy or heavily trafficked is the area during the day? How safe does it feel at night? As you compile these observations, ask yourself, if I were a prospective renter, would I really want to live or work here? Your answer to that question will go a long way towards determining whether you have found an exceptional and potential profitable location for passive income. Strategy 5. Projecting your cash flow honestly. Once you have decided on a property type and investment location, it is now time to start looking into specific properties. Keep in mind the primary purpose in real estate investing is to generate positive cash flow, aka passive income. To make the kind of money you want, each property you acquire needs to generate positive returns. Otherwise, you are just wasting your time and investment dollars. When a property owner is trying to sell a rental property, they usually prepare a financial pro forma. This contains both income and expenses. Usually income comes largely from the rents, and you want to make sure these rents are realistic. If rent increases have been small in the recent years, they are unlikely to jump 10% per year. Occupancy rates for an apartment that is only half leased for the past few years are unlikely to hit 80-90% occupancy in the immediate future. You want to take into consideration all of the costs involved in purchasing and maintaining the property in question. Usually rental properties costs are mainly operating expenses, managing and maintaining the property, and debt servicing costs, interest expenses on loans you obtain to pay for the property. But there can be hidden costs. Does the property need new flooring or significant work? Are there new government regulations that you need to comply with? Insurance costs, HOA, dues, taxes. Making an honest assessment of the full range of income and cost factors will strike a good amount of potential properties from your list. But eliminating high risk or low return properties will generally mean that you increase your opportunity for properties that do make good returns in low risk investments. Remember, everything has a risk, but it's a matter of you doing your due diligence properly and with sound thinking, so that you are making sure you're choosing your properties and investments wisely, the ones that have low risk and high returns on cash flow. Okay, and you can improve the cash flow, you can scale it. Okay, you want to keep those things in mind. Strategy number 6, be good to your tenants. It is common for new real estate investors to focus on the bottom line, aka cash flow, but you must be careful not to take the emphasis on money too far. You want to protect your cash flow for the long term. If you are renting or leasing your properties, you want to take care of your customers like any business. Make sure they're happy or you won't be in business very long. Remember, real estate is good as your tenants are. So if the tenants are happy, you keep them happy. The environment is healthy, it looks good, it feels good, it's well maintained, then they're always going to pay that rent on time. And when you increase the rent, they're going to understand it, so that you're going to improve some things, or you have already improved some things. Maybe you added dryers, or you changed the AC, or whatever that may be, that improve conditions in the investment. Okay. This doesn't mean that you must be extravagant or go overhead, but it does it does mean providing clean, well-maintained properties and regularly inspecting your rental units. It also means responding quickly and courteously when problems do occur. Going to all of this trouble and expense is a cost you need to plan for it. You want your properties to remain fully rented with good, positive online reviews. Strategy number 7, level up. Remember the game of Monopoly? There is one key principle in that game to remember. 4 greenhouses lead to 1 red hotel. Most real estate investors realize even after just a short time in the business that the big profits come with larger and larger properties. It is difficult, for example, to generate a sizable income when your sole investment property is a 150,000 duplex or starter home. The solution is trading up. Trading up involves selling a smaller or less profitable property and cashing out to then purchase a larger and more lucrative piece of real estate with the proceeds. There's one catch. However, every time you cash out, you receive a capital gain. Capital gains are taxed at a lower rate than personal income by both the federal government and many state governments. So how do you get ahead when you are giving up so much of your gain in taxes? The answer is you don't give the money up. It is not hidden income or doing anything illegal. The government wants you to purchase larger and larger properties because that means better housing and commercial properties being created. And the government gives you some powerful incentives to do just that. The most important incentive is something known as 1031 exchange. The number 1031 is the section of the Internal Revenue Service Code that governs a certain class of real estate transactions. In simple terms, 1031 exchange allows you to roll over the capital gains from one investment property into another. But you have to adhere to the rules precisely. If even a single form is filled out incorrectly or the smallest requirement is not met, the IRS can disallow the exchange. Successful completing a 1031 exchange is a lot of work, but it's worth it. In fact, if you want to be phenomenally successful as real estate investor, 1031 exchanges and other tax-friendly ways of trading up or leveling up are tools that you will want to use more and more frequently as you are investing business expense. Right? So you want to be expanding your business by using the tax strategies and using what is already in the law to help us build more cash flow, keep more of our cash flow, and get higher returns because we're acquiring bigger assets when we're talking about real estate, right? Implement and keep learning. The 7 strategies above are real estate tips and secrets that help an investor become financially comfortable or even wealthy. But they are still just ideas and tips. The only way to make these strategies is to implement them in your real estate business. You also need to keep learning because these strategies barely scratch the surface of all of the knowledge you need in order to be a lifelong and successful real estate investor. Act now and keep learning throughout your life, and you will find that real estate investing can provide you with a wonderful foundation of wealth and happiness. Make sure you go to our website, read one of our ebooks. If you want to get started right away and you don't have all the time to maybe get into real estate, then go online and start building passive income. We have an ebook that is right for you if you want to start building your asset column with digital assets, called How to Build Cash Flow with the Internet, Turn Passive Income On. It has over 500 pages of financial education made simple, plus a step-by-step guide on how to get you started with creating sales on autopilot, selling other people's products. Everything is already basically made for you, okay? Online, because we have already systems and companies that have done the work and put together all that is needed in order to make passive income. So if you want something that will produce fast results, then read that ebook. It's going to help you in getting started right away, okay? You're going to find it on our main website, and also you can look on the link that I'm going to put below in the description of this video here on our live broadcast on YouTube channel, and also on our podcast if you're hearing this, because I'm doing both at the same time, okay? So with that being said, I hope that you have learned today on this amazing, valuable video that we just talked about on the 7 strategies about real estate investing, okay, and what you can do to start building passive income. Remember, rule number 1 is to work to build passive income and to make money work hard for us. Okay, that's the rule number 1 of our community at Master Investor. Make sure you subscribe to the channel, bringing you the good and bad news of money, the business principles that work in all economies. I appreciate you very much. Thank you for being part of us, and thank you for your business. I'll see you on the next live broadcast, and make sure you subscribe to the channel. Bye.